Hello traders, the market is driven by supply and demand, which are your support and resistance. If ever you can get a strategy or an indicator which can plot those lines, it's going to be easier for you. So today guys, we are going to be using Fibonacci, as you can see, to predict this day. So this is my daily Fibonacci. As you can see, the market respected the 38.2 Fibonacci. So we have the 38.2 and the 50 and the 68. So these are the lines or the resistance which we are going to be watching uh, for. So these are the resistance which we are going to be watching for. So guys, this is just a preview of what you are going to be learning about today. You'll know at the end of the video, you'll know how to plot these lines. You'll know when to predict the market, where to place the support resistances of the market. Also guys, this Fibonacci does not give you the exit, the exit lines. It only give you the entry lines. So if ever you didn't watch my other videos, you can go and watch my other videos where it gives you the entry and the exit. So this one, it only give you the exit, I mean the entry point only. So let us erase everything on the screen. So I'll show you how to plot this Fibonacci. Okay guys, welcome back. Now guys, to predict the previous, I mean the day which you are currently on, you have to use your previous day, highs and low. So first of all, you have to identify your highs and lows. In my case, my highs and low, this is the high and this is the low of the day. Okay, this is the low of the day. This one, this is the low of the day. So I'll use this previous day to predict this day which I want to predict, right? So what you have to do, you are going to the indicators. You scroll down, you will find Fibonacci retracement. Also watch my other videos where I'm teaching about Fibonacci X, which is the most favorite one, is the one which I like to use. So, but for educational purposes, I will also teach this one so that if ever you have a strategy, you can incorporate it with it. So you are going to take, since this is a downward trend, you are going to take the 100. The 100 is going to be upwards, and then the 0 is going to be below, and vice versa, right? So after that, you'll see the lines have plotted. So immediately guys, to 22.6 Fibonacci, on your case guys, you must click it here like this, and then you remove it. Why the 23.6? It is not just they it is not a strong, it is not a strong resistance or a support based on the market. So you have to have at least three lines: the 38.2, the 50, and the 61, right? Because the market respect these three resistances, right? Or support, depending on which side you are going to place your Fibonacci. So let us watch here, guys. The market went upward and then it reacted on the 38.2. When you see this happen, you now know that, okay, this resistance is strong. Remember, guys, if there are no orders here, the market was not going to do what? Was not going to act the way it acted, right? So remember, guys, when you see the market moving upward, just like this, it was moving upward and then start reacting on that point, it means that there are orders, right? So if there are orders, it means that this is a strong resistance. There's a high supply here in this zone, right? There's a high supply. That's the reason the market went down, right? And it was strong even at the previous day. When it comes back, it also reacted again and then until it broke that level, right? So that's how you use your support and resistance level drawn by Fibonacci, right? You can also watch my other video where I use a Fibonacci for entry and exit, because this one, it has limitations. As you can see, it only gives you the entry. What about the exit? The exit is not there, right? So after getting your supply, you must also know the demand zone. So subscribe to this channel and click on my other videos. Search for my other videos on Fibonacci X, where you'll get the supply and demand of the market, or support and resistance in your daily language, right? So this is how you should plot your Fibonacci, your Fibonacci retracement. That's how you draw it. You first swing high, swing low, and then after that you wait for the market to move towards the selling zone. This is the supply zone. All these levels they create all these levels they create a supply and demand levels, right? So to recap, guys, you find your swing high and the swing low, and then after that, you plot your Fibonacci from 100 to 0, and then after that you'll get these lines. So after placing these lines, now you'll start to see how the market is going to react, right? Remember, guys, Fibonacci does not mean that if ever you place it this day, when the next day it won't work. Yes, it can work for this day, it can also work for this day, it can also work for the next day. Why? Depends on the level of orders, block orders, which are placed on that place, right? For those coming for that current time. So it means that the level of orders which were placed there, they were strong in such a way that they put a hold on this day and on this day and on this day, and finally break, right? So, but every day you will be trying to scale the market based on Fibonacci. You will place your Fibonacci every day as you go on and go on. We can also take another example on this day, guys, to predict what is going to happen. Let us take, we want to predict this day which we were watching using the Fibonacci. So here, guys, we are first of all identify, right? Identify your highs and low. This is my high, this is my low. Since this is an uptrend, I'm going to use a Fibonacci which is increasing, right? So my 100 is going to be below. Fibonacci retracement, you put your 100 below, you take it from low to high. Since this was a bull market, you take it from low to high, and then there we go, right? So you see some bunch of lines here. It means that in this case our demand zone, it is this level, meaning that this level is a level of what, of buyers, where it's a level where there's a probability that buyers are here, are below. And based on that probability, you'll see that probability when the market reaches that zone. So when the market reaches that zone, there was a reaction. Immediately you see the reaction, it means that the orders, block orders, even though the market went up and then it went down. That's the main reason you must watch my other video, which gives you the exit point based on these Fibonacci. If ever you have an entry point but you don't have an exit point, you do have a supply point, I mean a demand point, but you also have to get a demand, I mean a supply point, so that you know when to enter and then to exit. Until next time, guys, I hope you watch this video, and I hope you will like and subscribe